Greetings to all. Our next topic of discussion is scope and objectives of management accounting. Management accounting is a new approach to accounting. The various facts of management accounting are of great significance and they form the scope of management accounting. So let us discuss the important aspects which come under scope of management accounting. The first one is financial accounting. As we have already discussed in the definition of management accounting, that management accounting is nothing but redesigning the information which is provided by financial accounting in order to make that information useful to the management for taking important decisions in the business. So, firstly, financial accounting comes under the scope of management accounting. Cost accounting. Cost accounting provides various techniques for determining cost of manufacturing the product or cost of providing services. Cost accounting also helps in finding out economic and non-economic fields of production. So the efficiency of different departments is judged by setting up standards and then finding out variances. So cost accounting is also an important aspect of management accounting. Third comes under the scope of management accounting is forecasting and budgeting. Budgeting means expressing the plans, policies, goals of the business for a definite period of time. Targets are set for different departments and responsibility is fixed for achieving those targets, and the actual performance is then compared with the budgeted figures, which will give an idea to the management about the performance of different departments. So budgeting and forecasting will help the management to take important decisions of the business and will help in management accounting. Then tax accounting and tax planning also comes under the scope of management accounting. In the present complex tax systems, tax planning is an important aspect of management accounting. Income statements are prepared, tax liabilities are calculated, the management is informed about the tax burden from central government, state government, local authorities. Various tax returns are to be filed, GST returns are to be filed, tax payments are to be made in time. So tax accounting comes under the important aspects of management accountants' duties. Then next come under scope of management accounting is internal control and audit. Management accounting highly depends upon internal control system existing in the organization so as to identify which are the weaker sections of the organization which needs to be considered more by the management. Next is cost control procedures. Cost procedures and methods are needed to use various factors of production in a most economical way. The studies about cost, relationship of cost and profit, that is very useful for using economic resources efficiently and economically. Next comes under scope of management accounting is financial analysis and interpretation. Various financial techniques like ratio analysis, fund flow statement, cash flow statement, trend analysis, they are used to analyze and interpret the financial data, and all this comes under the scope of management accounting. Management accounting involves reporting to the management. Whatever is done under management accounting and whatever is done by management accountant, that is done in order to submit the reports to the management according to the requirements of the management. So the most important aspect of management accounting and the ultimate purpose of management accounting is reporting to the management according to the requirements of the management. Next comes is offering services. Management accounting may be required to control an office. Management accountant may be required to control an office. He is or she is expected to deal with data processing, operating, duplicating, communicating. So the management accountant will also be reporting about the utility of different office machines and equipments. Next comes under the scope of management accounting is statistical tools. Management accountant uses various statistical tools like graphs, charts, diagrams in order to interpret the data, because these are the best tools to interpret the data, which will ultimately help in taking important decisions of the business by the management. Next we will discuss about objectives of management accounting. Firstly, it includes analysis and interpretation of financial statements. Why management accounting is required? In order to analyze interpret the financial statements prepared under financial accounting, so that they can be useful to the management of the business for taking important decisions of the business. Management accounting includes planning and policy making. The purpose of management accounting is to help the management in planning the business and in making the policies of the business, because it is the management of the business who have to design and formulate the policies of the business. And for formulating policies and for undertaking planning, they need various kinds of important information, accounting information, and that accounting information is provided to them by management accountant. Management accounting helps in decision making of the business. Ultimately, decisions is to be taken by managers, but management accounting will help in providing information to the management for taking those important decisions. It helps in controlling, because management accounting tries to find out the variances where the standards have not been achieved and where corrective actions need to be taken. So management takes corrective action based upon that information. Management accounting also helps in coordinating the various other departments of the business. Management accounting provides tools which are useful in coordinating the efforts and activities of different departments and sections of the business. Coordination is done through functional budgeting by the management accountant. Then communicating. The purpose of management accounting is to communicate the important information, financial information to the management, which will help the management in taking decisions. It helps in evaluating efficiency and effectiveness of policies. Ultimately, through management accounting, the policies are formulated. So the effectiveness of policies and the effectiveness of the framed policies of the business, that all depends upon the management accounting. Now, what are the tools and techniques of management accounting? When we'll study this subject, we'll discuss about slowly and steadily, we'll discuss about all these tools. Our next chapters are related to financial statement interpretations and analysis, fund flow analysis, cash flow analysis, budgetary control, management reporting. So all these tools will be studied in management accounting. Firstly is financial statement analysis. Under management accounting, we will analyze and interpret the various financial statements of the business. The most important financial statements are income statement, balance sheet. So under management accounting, we'll interpret those financial statements through various tools. Then we'll also do fund flow analysis. Fund flow analysis is analyzing the fund position of the business, analyzing the changes in the working capital of the position of the business within two balance sheet dates. दो बैलेंस शीट डेट्स के बीच में फंड फ्लो पोजीशन, बिजनेस की वर्किंग कैपिटल पोजीशन में जो चेंज है वो कहाँ से आया, कैसे आया, फ्रॉम वेयर द फंड्स हैव बीन रेज्ड एंड वेयर द फंड्स हैव बीन यूटिलाइज्ड. That is the purpose of fund flow analysis. The next tool and technique which will be studied in management accounting is cash flow analysis, which will be analyzing the difference in the cash flow position of the business between two balance sheet dates. So that will be studied under cash flow analysis. Then budgetary control. Budgetary control helps in firstly making budgets and then controlling through those budgets, and actual performance is compared with the budgeted figures and then corrective actions are taken. Similarly, standard costing and marginal costing also come under management accounting. Those have been studied by you people under the subject of cost accounting. Then management reporting. Under management accounting, the main purpose is reporting to the management. Whatever information is analyzed and it is presented in the form of reports to the management as per the requirements of the management. And last is statistical and operations research techniques. The various techniques of operation research are also studied under management accounting. They comes under the scope of management accounting. What are the limitations of management accounting? No doubt management accounting is of acute use to the management of the business, but still there are some limitations of management accounting, and let us discuss those limitations. The first limitation is reliance on accounting data. Of course, management accounting is not new. It is nothing but redesigning the accounting information. So if accounting information is not reliable, the management accountant will also not be able to provide reliable information to the management. So ultimately, the effectiveness of management accounting depends upon the effectiveness of financial accounting data. It is based upon historical data. Although management accounting helps in forecasting and taking decisions for future, but everything is based upon historical data. It is highly expensive, of course. Implementation of management accounting requires new staff to be appointed. Further infrastructure is also required. So, of course, it is an expensive process. Complicated application, of course, everything needs to be derived according to the requirements of the management, and sometimes the application of the procedures become very complicated. And lack of objectivity. If subjectivity is too much involved, whatever the decisions are taken under management accounting or whatever information is provided to the management by management accounting, that is not 100%, that may or may not 100% accurate. That is not objective information, that is mostly based upon subjectivity. So on the basis of that subjectivity or subjective information, the management has to take decisions. So lack of objectivity can become a limitation under management accounting. So these all are limitations of management accounting. With this, the first chapter of management accounting, the nature and scope of management accounting, is complete. Thank you.